Bitcoin, boom or bust? The digital currency is on an absolute tear. The price rose more than 300% since October. Before then, Bitcoin was volatile. At its lows, almost exactly a year ago, Bitcoin was just 7,700. Last Sunday, it hit 73,000. No surprise, therefore, that local Bitcoin exchanges are thriving. The punters have got the message and are piling in.
I think it was 11th of January this year. We saw an all-time high daily trading volume of 130 million Australian dollars. That accounts to be about a 7,650% increase from the previous 90 days.
But in the sober real world of the Reserve Bank, it doesn't matter what Bitcoin's valued at, it's still not real money.
A lot of fuss over Bitcoin. It's not a payment instrument and it's not even really money. I think it's there's a lot of fuss about it as a potential asset.
Bitcoin was created in 2008 with a record of every transaction kept on the blockchain. The currency attracts investors who want direct control over their money rather than central banks.
I got to a point sort of in my own personal finances where I was starting to diversify into, different areas. I think a lot of people of my generation are, looking at different ways they can invest their money if they can't yet quite afford property, which is the tried and trusted method in Australia. So, yeah, Bitcoin seemed like a good opportunity to throw some money in. I'm in control of it, see how it goes. And obviously, over 3.5 years, I've been pretty happy with how it's performed.
2020 was a turning point for cryptocurrency as an asset class, when it went legit, if you like. It was aided by billionaire investors Paul Tudor Jones and Stanley Druckenmiller, tipping money into crypto in October and November. Tesla founder Elon Musk followed a few months later. To some, their actions legitimises cryptocurrencies like Bitcoin, Ethereum and Dogecoin as places to park cash.
Retail interest is booming, and what's important to also note that compared to the previous run in 2017, the current run of Bitcoin has attributed to a lot of institutional demand and also interest as Bitcoin to view it as a strategic portfolio allocation.
Buying Bitcoin is easy. You join an exchange and then transfer real money for Bitcoins or part of a Bitcoin.
I'm someone who's quite content to trust my analysis and enter a trade and sit in that trade for a number of days and just gently manage it as it goes along. There are some people that would look to get in and out on a trade, so they might just log on once a week, look at the real short time frames and enter a very quick trade. But yeah, personally myself, I like to always be sitting in some sort of trade on Bitcoin, especially when it's going up a lot like right now.
Richard Galvin manages 3 crypto hedge funds. His venture fund and digital asset fund have been top performers.
Both those funds hold between sort of 10 and 12 assets at any point in time, from Bitcoin to Ethereum to much smaller assets. Our venture fund generally invests in very new startup type assets being brought to market by entrepreneurs, so they're not yet listed. In most cases, they're not yet even created. They're more of a concept and an idea.
The big question for any investor is, where do I do my due diligence? After all, a quick glance, you'll see a range of Bitcoin exchanges have collapsed, and even the cryptocurrencies themselves. For a share market listed company, you'd start with the annual report, see who the directors are, and assess the market. But that's almost impossible with Bitcoin.
Because it is a very different market to the one I used to work in around equities and traditional finance, and there's no brokers providing research coverage, there's no broad press coverage of anything really outside of Bitcoin, so you really need to find your own information, and that's something we've spent a number of years, myself and my team, building around the world, making sure we've got connectivity through Asia, through the US, through the west coast of the US in particular, making sure that we're hearing of the newest trends and meeting with the newest entrepreneurs that are moving into the space.
Crypto has a reputation for being used by organised crime, with New South Wales Police arresting a man this week accused of laundering more than $5 million through Bitcoin.
Cryptocurrencies are a particular concern. I think many are used, at least in a transactions sense, mainly for illicit financing. And I think we really need to examine ways in which we can curtail their use and make sure that anti-money laundering doesn't occur through those channels.
But a report by Chainalysis found while crypto appeals to criminals due to anonymity, In 2019, criminal activity represented just 2.1% of all crypto transactions. As crypto becomes more accepted, self-managed super funds are diving in.
We do see a growing increase of interest in the SMSF corporate and company category in our user signups. The last I checked, the number was something like 400% growth versus the previous quarter.
And look out for crypto-based exchange-traded funds this year. The first in the world launched in Canada on Monday, quickly attracting hundreds of millions of dollars in assets under management.
I think it's something that's inevitable that most exchanges will adopt some form of Bitcoin ETF. It seems to make a lot of sense. It allows smaller investors to get access through an easy channel they're used to dealing with. It allows them to effectively outsource the storage and the security of the asset to a much bigger group and basically aggregate that demand and make that storage more affordable. So I think it's inevitable. I would expect this year there would be an ETF on most major exchanges, although we've been expecting it probably for the last 18 months.
So where does Bitcoin go from here? Only 21 million can be created, and there are already 18.6 million in circulation. So perhaps when supply runs out, demand could jump even higher. It's a risky train to hop on, but it could be worth catching. Edward Boyd, Sky News.